So I've shown you how your wealth held in the system is vulnerable to counterparty risk. Now I'm going to show you why I say that gold and silver are severely undervalued. And it boils down to demand and supply, because we do know that demand has been growing at great lengths since the crisis hit in 2008. And yet, if you look at the Wall Street spot price of gold, that's been declining. And we can see from this chart and others that there has been a deficit in physical gold. And let me tell you, when gold goes into the coffers of the central banks and the ultra wealthy, it doesn't come back on the market again. So there clearly is something that they know that you don't. So this is one reason why I say that gold is severely undervalued. Let me show you other reasons why I say that. Now this is the debt limit versus spot gold. Okay, interesting to note, I'm so sorry, this thing is giving me a very hard time today. Interesting to note that once the global central bankers came out and said, we will do whatever it takes, open-ended money printing, that's when they started really hammering the spot price of gold hard. And of course we know that the reason why they do that is because a rising gold price, and it is an indication of a failing currency. Now this is the Fed balance sheet, and it shows you the hyperinflation of the money printing that they injected into the banking system. Interestingly enough, when the crisis became apparent to everybody, they whacked gold about 35% at the same time that they did their first round of hyperinflating money printing. And then once they made that commitment, open-ended money printing, they whacked it again and a whole lot bigger. So you can't do this in the physical market. In the physical market, that's going deeply hidden and it's not coming back in the market. There is a limited amount of physical gold and silver, but there is an unlimited amount of Wall Street gold and silver, and it's easily manipulated, as I've shown you in other webinars. Oops. So what we're looking at here, I don't know if any of you have read Jim Rickards' latest book. I'm going to read a quote from that book because it's what we have facing us. And he says, it's possible to devalue every currency in the world against gold at the same time because gold is money, but it's a different kind of money. It's not central bank money. Gold is the exception to the currency wars. Gold is the one form of money that every form of money can devalue against simultaneously without fighting currency wars. Gold does not fight back in currency wars. That means a much higher dollar price for gold. So what he's really referring to, the range that he puts in gold, is its fundamental value right now somewhere between $10,000 and $50,000. That is at this moment if they were to do the reset right now. And that's because the range is so broad because we really don't know what the cover ratio is going to be. But the more debt they grow, the higher these numbers go, and even if it was at the lowest level, the $10,000 level, which by the way comes very close to my calculations as well, I absolutely agree with him, you're still looking at gold somewhere around $1,200. It's a bargain. It is severely undervalued. It's on sale. So if you've built your position, great. If you haven't built your position, get it while you can, while it's available and while it's on sale.